You've been saving for 3 very long years. You've made a lot of sacrifices. You finally have a solid down payment. You've been working on your credit and working on your credit. Now you can say you have decent to good credit. You finally get pre-approved with that lender. You've been working so hard and you finally feel ready to buy a home here in San Antonio. And then reality hits you square in the face. The home that you wanted at $320,000, your monthly payment at today's rate is about $2,200 a month before property tax, which Bexar County could add another $600. You're looking at $3,000 before you even touch the insurance or the HOA. 3 years ago, that same house that you wanted, that same price at the rate of 3% or under, the payment would have been significantly lower. So the question is this the hardest housing market San Antonio buyers have ever faced? That's exactly what we're going to be digging in or talking about today. By the way, hit that subscribe button right there. You see it? So you can stay in the know and we can give you this real estate content that you want. Today, we're going to be diving deeper into the buyer side of this housing market. We're going to be walking you through exactly what is making this harder, what's actually shifting in your favor or the buyer's favor, because some things have, and the strategy specific to what's happening right now is working for buyers who are closing deals right now in 2026. Let's look at the data where San Antonio's market actually stands in 2026, especially with all this craziness that's happening. So before we get talking about the problems and solutions, let's make sure you're looking at the same numbers, because there's a lot of noise out there and you've seen it, and context matters in today's market. As of early 2026, the median home price in San Antonio is sitting in the low to mid $280,000. That's down from the pandemic peak around $310,000 to $315,000 we hit in 2022. And yes, prices have come down from that high. That's real. But mortgage rates are hovering around the mid to upper 6% range for a 30-year fixed rate, depending on your credit score and the type of loan that you're getting. And that rate environment is sitting the single biggest variable that's reshaping affordability for buyers across the board. Days of the market have increased, sellers' concessions are more common, inventory has grown, but it hasn't grown nearly enough. And the unevenness is where the buyer's experience gets a little bit complicated. Let's break it down, all of this down. But first, let's call the 5 things that make this legitimately difficult for buyers like you right now. Let's look at the 5 problems that's affecting the housing market right now. Problem number 1, mortgage rates, the monster under the bed. This is the new norm nobody ever wanted. This is the root to almost everything else on this list. When rates were at 2.5 to 3.5% range in 2020 through early 2022, buyers had extraordinary purchasing power. A $300,000 loan at 3% cost around $1,265 a month in principal and interest. That same loan at 6.75% is almost $2,000. That's almost $700 more every single month for the same exact home. And what makes this particularly brutal or difficult is that sellers who locked in at sub 3% rates during the pandemic do not want to sell. Would you? Why would you want to trade in your 2.8% mortgage rate for almost a 7% on your next purchase? That creates what economics have been calling a locked-in effect, and that is one of the primary reasons inventory is constrained. Nobody is predicting a return to 3% rates, so get that out of your mind. The question is whether rates are going to be easing into mid-5s over the next 12 to 24 months, and most forecasters suggest gradual, not dramatic movements at all. Watch out, the current rates. Every $50,000 you borrow can roughly be around $330 a month. Know your real estate numbers before you fall in love with the listing price. Now let's look at problem number 2. Inventory. Not enough home buyers can afford. Inventory in San Antonio has improved compared to pandemic lows. That part is very true. But the distribution of inventory was getting frustrating for a lot of buyers, exactly like people like you. In a $350,000 range, $50,000 range and up range, you'll find options. You have more homes to look at, more negotiating room, more reasonable timeline to make a decision. The upper mids to luxury segments have actually loosened up, but the numbers under $280,000 range, where most first-timer buyers and military families are shopping, inventory is still generally thin. Most move-in ready homes in that price range is in desirable school district move fast. Some of them are still seeing multiple offers, not many but some. The pressure hasn't evaporated, it's just shifted down to a price stack. And new construction, which was supposed to relieve some of this pressure, has its own set of complications. Builder incentives are out there, but base prices have stayed sticky, and finished product is often in the outer ring submarkets. That adds commute time, a lot of commute time to your drive time. Watch out. Don't assume that because you've heard the market has cooled that every single segment is easy. The sub 280,000 range, you still need to move with urgency and a well-priced home. Now let's look at problem number 3. Price correction isn't saving you much right now. A lot of buyers have been waiting for prices to fall far enough to make the math work. The math is not mathing. Here's the honest reality. The correction that happened isn't big enough to offset the rate increase. San Antonio prices dropped roughly between 8 to 10% from peaks to current market. That sounds like a relief, but run the math. If a home went from $310,000 to $284,000, a $26,000 drop, and rates went up from 3 to 7% the same period, your monthly payment on that cheap home is still several $100 higher than it would have been at a peak price and a low rate. The price correction has helped on the down payment side. A lower purchase price means less money out of your pocket at closing, but ongoing monthly cost of home ownership has not returned to pre-pandemic levels, and it will not unless rate falls meaningfully. That is not a reason not to buy, but it is a reason to go with an eyes open about what your actually monthly payment will be. Watch out. Run your payment at today's rates, not the rates your parents got, not the rates your friends got 2 years ago. Underestimating this is the most common mistake buyers see today. Now let's look at problem number 4. Property taxes are quietly crushing your budget. This one sneaks up on you or buyers who are new to Texas, and it is a big deal. Bexar County property taxes rates are typically between 2% and 2.5% of the assessed value annually of your home, one of the highest effective rates in the country. A $280,000 home, that's roughly around $6,000 to $8,000 per year. That's almost $500 to $600 per month added to your monthly payment through escrow account. When lenders qualify you for a loan, they're looking at your full PITI payment: principal, interest, taxes, and insurance. The property tax line alone could meaningfully shrink your purchasing power. You qualify for a given income. Buyers who have only thought about the interest rate often are surprised when lenders return with the real numbers. Now the good news, you can protest your appraisal value every year. Your homestead exemption reduces your taxable value, but in year 1 of ownership, you're paying it at full-fledged or full amount. Here's an expert tip. File your homestead exemption the moment you close. It's free, reduces your taxable assessed value, and caps how fast the appraisal can raise year over year. Now let's look at problem number 5. Competition where it hurts the most. Competition has cooled in overall markets, but it has not cooled uniformly. And that is causing buyers to let their guards down at the exactly the wrong moment. Certain neighborhoods, certain school districts, certain price points are still competitive as anything we saw in 2021. Homes in the North Side Independent School District under $270,000, move-in ready homes in Commerce and University City near JBSA footprint, entry-level homes in Alamo Ranch that hit MLS clean. These properties or these homes are still getting multiple offers within days. Meanwhile, if you're shopping at a dated home on a busy street in a fringe location of that $290,000, you got all the time in the world. The market is segmented, and what is true in one segment does not apply at the other segment. The lesson: when you find a well-priced home at a location or the location that you're looking into that's move-in ready in a desirable school district, treat it like the competition in a situation is probably still is. Watch out. Don't lowball a genuinely good listing just because you read the headlines that the market has softened. You will lose it to someone who's actually did their homework. Now let's look at the silver lining. Is there a silver lining? What has actually shifted to the buyer's favor or to your favor? I know. It gets a little bit brutal when you're doom scrolling every single headline. We've been honestly about that this was hard. Let's look at what equally honest about what's generally better for buyers today compared to 2021 and 2022. Sellers' concessions are back. This is huge. During the pandemic buying frenzy, sellers would not give up a dollar or a penny. Today's motivated sellers are regularly offering closing cost assistance, rates buy-downs, and repair credit. On a $300,000 home, a seller pays a 2-1 buy-down can reduce your rate by 2% in year 1 and 1% by year 2. That's real monthly savings while you wait for rates to move or finally come down. Time is on your side and more transactions. The average days on the market in San Antonio has increased meaningfully to your advantage. That means you can inspect without waiving it. You can think about it for 24 hours before writing an offer. You can negotiate. That's not true 2 years ago or 3 years ago when everything was crazy and competition on overpriced or imperfect homes is essentially gone. Sellers aren't pricing right or sitting. If you're willing to do a little work and look past some cosmetic issues, you have a real leverage on your side. Opportunity. A seller's paid 2-1 buy down can save you $300 to $400 in year 1. Ask for it on every single offer when the seller has days on the market piling up drastically. The 3 strategies that are working in your favor right now. Let's look at strategy number 1. Get rate ready before you shop. The single biggest mistake buyers make in markets starting the housing hunt, looking for a home before they truly understand the rate and their payment. Get pre-approved, not pre-qualified. Actually get pre-approved before you look at any single listing out there. And while you're at it, talk to your lender about every rate reduction option available to you. Discount points, temporary buy downs, ARM products if you have the timeline fits. VA buyers, make sure your lender knows VA guidelines cold because VA loans in this market offers you an advantage that conventional buyers cannot access at all. Know your exact payment at your exact rate is not just a smart budgeting move, it also gives you the confidence to move quickly when you find the right home, when the right home appears, your forever home. Now let's look at an expert tip. VA buyers no down payment requirement, no PMI. Sellers can pay on your closing costs. In 2026, this is one of the most powerful budget buying tools in San Antonio. Now let's look at strategy number 2. Target the right price band and submarkets. Not all San Antonio homes are in the same market. All buyers who cast too wide of a net end up competing where they don't have to and miss opportunities where they actually have an edge. If your budget tops around $280,000, understand that you are in a competitive segment, but be ready to move fast on a good home. That's nice. Have your pre-approval in hand. Don't sleep on it at all. If you can stretch to $300,000 to $350,000 range, you'll find significantly more inventory, more negotiating room, and more days on the market to think about it. Sometimes a small budget adjustment opens up a dramatically different buyer's experience. Also, don't overlook outer ring neighborhoods like Converse, Schertz, Cibolo, Seguin, Pleasanton area communities. Price to size ratios are often more favorable in these areas, and they serve JBSA commuters well. Now, another opportunity. New construction builders in the outer ring of San Antonio are offering interest rate incentives, sometimes between 4 to 5.5% with preferred lenders. Run the full comparison against resale before you dismiss it at all. Strategy number 3, negotiate with the buyers you couldn't do in 2022. 2 years ago, buyers were waiving inspections, they were waiving appraisals, they were paying tens of thousands of dollars overpriced just to get into the home. That area is over for most of the market, and that means you can negotiate again. if you know what to ask for. Ask for closing costs credit, ask for rate buy downs, ask for home warranty, ask for repair credits after inspection, ask for sellers to contribute to your loan cost. The worst they can say is no, it doesn't hurt. And in a market within rising days on market and motivated sellers, they often say yes. Buyers who are treating every offer like it's 2021 are leaving money on the table. The leverage has shifted to your favor. Use it. Now here's an expert tip. In 2026, a well-negotiated offer can save you buyers between $5,000 to $12,000 at the table. Real money that offsets your current rate environment. Now the question is it worth buying right now in San Antonio? Here's my straight up answer. Yes, for the right buyer with the right strategy and the right segment of this market. If you're a military family using VA loan, 2026 is still a genuinely strong time to buy in San Antonio. Your finances advantages are real, inventory is better than it was at its peak, and sellers' concessions are available for you. If you're a first-time buyer who's been sitting on the sidelines waiting for rates to crash or to drop to dramatic levels, waiting might not be the answer at all. Demand trends to surge when buyer rates and inventory trends to compress again. Buying now with a seller's paid buy down and refinancing later is a legitimate good play. If you're buying within a shorter time period, 2 or less years, this market carries more risk. The equity run-up isn't guaranteed and the transaction cost is real. Think longer. And if you're a cash buyer and have significant equity from another market, San Antonio in 2026 is very much open for business for you. Look, searching for a home in this market alone is hard, and you know it. That's not a sales pitch, it's just the plain truth. The rate environment, the segment dynamics, the negotiating strategies, all of it requires real local knowledge and someone who's doing deals in this market right now. That's us. Rosa and I work with buyers all across San Antonio. First-time buyers, military buyers, moving people moving over here, relocators, families moving in the future. We sit down with you, look at your actual numbers, and help you figure out if now is the right time for your specific time frame. Search right here at this website. Contact us directly. No obligation, no pressure, just conversation about your specific situation that benefits you and your family. And hit that subscribe button right there. This one right here if you want weekly updates on what's actually happened in the San Antonio market. No spin, just data. Like, share, subscribe. Subscribe button's right there.